Those 8 interest rate hikes in Canada since March of last year continue to pressure our housing market. The Canadian Real Estate Association says home prices are down 15% from the peak of last year after an 11th straight monthly decline. The national benchmark price for a home was down almost 2% in January from December, while sales dropped by 3% in January compared to the previous month. Now, our housing market has seen an abrupt reversal since a frenzy during the pandemic, with those 8 hikes since March of last year as central banks work to cool inflation. Now, supply is part of the story as well. The number of homes that hit the market last month was the lowest for the month of January since 2000. American shoppers appear to be opting for retail therapy despite higher prices. Retail sales data in January did show the biggest monthly jump in nearly 2 years, up by 3%, rebounding from 2 months of declines during a weak holiday shopping season. Now, at the same time, this underscores the U.S. economy's resilience in the face of higher prices and those 8 interest rate hikes by the U.S. Federal Reserve since March of last year. Now, driving the gain was a jump in car sales, along with healthy spending at restaurants, electronic stores, and furniture outlets. The next interest rate announcement in the U.S. comes up on March the 22nd. And a first for Airbnb, an annual profit in 2022. The company reported earnings, and the stock today saw the biggest one-day jump in almost 2 years on Wall Street. The home-sharing company also beat expectations on its sales outlook, expecting to see robust travel demand going forward. Now, Airbnb reported 88.2 million nights and experiences booked in the fourth quarter. That was a 20% increase from a year earlier, but believe it or not, still below estimates. In the CityNews Business Center, I'm Kris McCusker.